Let's move to Starbucks, which is a coffee and prepared foods retailer with stores predominantly in the USA, Europe and China.
I'm glad you mentioned China because I think that's really where the future of the business lies, in addition obviously to its established position elsewhere.
Market cap here, $77.2 billion, a PE of 27.1, so this is not a cheap stock, dividend yield of 1.9%. China being the big opportunity for this one. Would you concur with Paul?
Absolutely. Yeah. So by 2021, they're looking at rolling out 5,000 stores in China. Already Shanghai, I think, has 600 stores, which makes it the city with the most Starbucks retail outlets. So clearly a huge focus.
Shanghai has 600 stores, you say? 600
Starbucks stores. And I mean, they're looking at, I mean, generally the group is looking to add about 2,000 stores a year. I mean, a lot of those stores are going to be in China. It's coming to China very much as a premium brand as well. And their store formats are actually a little bit different from what they are traditionally in the US, slightly bigger, sort of facilitates meetings and lunches and that kind of thing, which really has worked exceptionally well. And you've seen a lot of the other sort of big American brands going into China and failing, whereas Starbucks has done absolutely exceptionally well, and I mean the growth has been spectacular. So they're saying 5,000. I mean, Howard Schultz has obviously stepped down as CEO, and it's really his project is now these roasteries. But he says, you know, he expects China to be bigger than the US eventually, and he says he doesn't know where the limit is, and he's saying 5,000 by then, but probably 10,000 plus in future.
Obviously this is very relevant to the Hot Stocks portfolio because we have exposure to Starbucks via Taste Holdings.
And we own Starbucks in the US portfolio as well, so
yes.
We're doubled up.
But Taste has really been a laggard, and in fact not even a laggard, it's hurt us, although we had a very small positioning.
Well, the good news is we're going to talk about it after the break, so
so I don't want to jump the gun
to
here.
Beat me up then.
So let's talk about Starbucks in the US context and the fact that, as you say, we have that direct exposure.
Well, it hasn't done all that well there either. Have a look at the share chart. You see it's gone a bit off the boil, so to speak. It's at $53, $54 a share and has been there for a while.
And that's down from that 65 level.
Yeah, well, at some point I suppose people thought that it was up and away, but they have a couple of trends. Same store sales in the US have been slightly iffy. The rollout and the benefit of their mobile application in the US has kind of seen its benefit, and people are anxious that, you know, where's the next hit going to come from. Also, its food offerings. And then as a final point, they had to shut down 300 stores under the brand Teavana. So they had bought a business called Teavana because they thought maybe in the tea industry there'd be similar opportunity, but they decided that isn't working, so they're shutting it down.
So the bet has to go back to what we said earlier in the discussion on China. Is China going to be the big kicker for Starbucks going forward?
I think yeah, China in terms of new store growth, yes. China is the big bet. I mean, they've partnered with WeChat as well, so I mean, they're really, you know, they're taking that mobile app to another level. But
is it already priced into the stock, the China opportunity?
I don't think so. No, not at this stage. I mean,
absolutely not. My worry is that American analysts sort of regard only their US trend as the principal driver. Even though they know it's big, they sort of call that international.
Yeah, and that's, I think that's, you're right. A lot of the US analysts are coming out and they're very concerned about the lack of Starbucks' ability to increase store footprint in the US. But I think that there is still an opportunity in the US and just to increase same-store sales. So it's very much about selling more coffee, premium brand coffee. And this is where, like Howard Schultz just now sits as chairman, his focus is on these roasteries, which is these absolutely high-end coffee experiences.
He's a true Starbucks fan here. We're going to have to.
They're building these things. They're very expensive. There's one in Seattle, which I've visited, but there's a new one opening in the meatpacking district near the High Line in New York City, and there's another one coming in Chicago. But they are like coffee tourist destinations. So people will go there because they want to go and see all the fancy roastery and the copper pipes and all the rest.
Well, I wish you told me that before I went to New York this weekend, because I did walk the High Line.
Exactly. Now, I don't know whether that one is opened yet, but they put millions into building these things. And literally, I tell you not, I would guess that in years to come, there'll be more people going to visit that Starbucks stores than will go to MoMA.
Oh, we're talking about an experience.
Go to the World Trade Center.
This is a coffee experience.
Exactly. They've got these incredible roasteries with guys with orange beards busy pushing beans around. They've got enormous, like, wooden and copper piping where the roasting's busy happening. They smell great. Everything in there costs a fortune.
So a new trend, we're going to see a new consumer trend where you're going to have your coffee in the roastery.
I mean, they're one of the market leaders. So I mean, they're innovating in the sector. And I mean, you know, if you just think how many ways coffee is sold, I mean, they're taking it to a whole nother level. So.
Well, I'll be very disappointed if you don't call this stock hot after
talking
it up. Hot. Paul.
Yeah, I think it is great, and I think it's a long-term play, and with the Chinese earnings coming through much stronger in future, definitely hot.